This episode of the Commercial Real Estate Investor Podcast is brought to you by my CRE Accelerator Mastermind, where you'll get access to my step-by-step investment blueprint, essentially a library of resources on how to invest in commercial real estate. You'll get connected to a supportive community of other commercial real estate investors that are doing projects just like you. You'll get personalized coaching and feedback from me every step of the way. Go to www.crecentral.com to learn more. Welcome back to day 6 of 30 Deals in 30 Days. Z is already in the live chat saying, here, just waiting for you to go live. We are live now, Z. Excited to see you here. Thanks for coming back, as always. Guys, today's going to be a fun one. We are going to be diving into a deal out in the Pacific Northwest. So one of the members of the 30 Deals, 30 Days Challenge jumped in the live chat, looks like maybe yesterday, and said, looking for my first deal here in Tacoma, Washington. I realize the Pacific Northwest seems untouchable price-wise, but I remain hopeful. Well, James, I'm going to show you guys how to find deals in even seemingly untouchable markets. I hear this from investors in California all the time, maybe even investors out towards the Northeast. There are places, you might just have to drive an hour, 2 hours away. But there are plenty of opportunities in your markets if you know how to go out and look for them. So, James, we'll be diving into your deal today. For those of you that are just joining us, maybe you haven't seen this before. If you want to join the challenge, go to crecentral.com/30deals30days. That URL is in the description below. Let's go ahead and get this thing rolling. So, we'll go to Crexy first. All right, we got the usual crew here. We got Jam, we got Watch Me Grow. And Z's saying, wow, no intro, just right into it. Let's go. Yeah, no intro today. We don't need it. Let's make this happen. All right, so we're going to go for sale, anything. Let's go to Tacoma. Let's see what's going on in Tacoma, Washington. I've never really looked at real estate here. We'll find out. So here's the thing. If you want to find some properties that are more affordable in your area, obviously you're going to have to do some value add, right? So what I'm going to do is I'm going to leave it at all types for now. Let's just say, most of y'all are looking to buy your first property in that kind of $1 million to $2 million range, right? So let's just set it for that. Actually, you know what? I'm going to do max $2 million. We'll leave the minimum at like $1. I'm going to exclude unpriced listings because we all know nobody likes those. Who's got the time for that? Dylan is saying you're relentless. Thanks again for this content. Happy to do it, man. Hey, we're on day 6. We're only, 20% of the way there? We got some time. It's going to be fun. Call me on day 29. I might feel differently about doing this every day. All right. Now, the other filter that I'm going to drop on this is max price per square foot, $100. That's going to immediately knock a whole bunch of these assets out. Let's see what we can find. Okay, cool. This seems like a very interesting opportunity. Let's open that in a new tab. Let's see what else we got here. Some land. Not really excited about that. Some more land. Not excited about that either. Medical building. That looks like more land. All right, 2.5 acres. We don't need that. I don't want any land. It's because I left all types on. You know what? Let's just, let's do retail. Let's do office. We'll do industrial. We'll even do mixed use and hospitality. Doesn't really matter to me. Self-storage. Let's get frisky. All right, let's see what we got. Knock out all that land. Nobody wants to. No. Oh, come on. Oh, it's listed here under retail. That's funny. You can tell that broker probably doesn't know what they're doing. $400,000 may not be bad. Why is that land still there? All right, well, there's a whole lot of retail development. The prices for the land's relatively cheap. Okay, $1.9 million for an industrial property. Could be good, could be bad. Let's see. Let's open that in a new tab. We'll save that one. Retail, 51,000 feet. All right. Let's take a look at that one as well. We'll figure out which one's going to be the most exciting for us. Investor alert. I'm an investor. All right. Tacoma iOS yard. I am not paying $1.6 million for industrial outdoor storage. All right. Daniel Alvarez is saying, I've been working in real estate for about a year. I'm based offshore for a U.S. company, and all of your info has been really helpful to secure some high-quality deals. I appreciate that, Daniel. I'm glad to hear it. It's been a lot of fun. I enjoyed doing this with you guys. So I appreciate that you guys appreciate it, to be honest with you. It's kind of fun. And I nerd out for real estate with my friends. So I'm sure this is a great outlet for them to have me do it with you guys instead. All right, let's see if there's any pictures of this building. No, there's not, which means that building is probably in really rough shape. Wonder if they've got a flyer. Seems like they might. All right. Ooh, cool. Come on. Look at that building. That's beautiful. That's just really cool. I like that. Wait till you see the inside. All right, 25,500 square feet. You got 15,000 square feet, two-story on Market Street, 7,500 on Court C, 3,000 square foot mezzanine, 8-foot to 18-foot clear height, heavy power. All right, 1,200 amps, 483 phase. That's pretty sweet. 10-foot grade level door. That's not as big as you'd like, but hey, for a building in downtown Tacoma, that's not bad. They say here they're asking $2.5 million. I swear we saw a cheaper price than that. Okay. Nothing else. Nada. Oh, look at that. Yeah, they've already come down $1 million. 1,102 days on market. Guys, they might not be interested in actually selling this one. I wonder what is actually going on here. I have a feeling that there's like, you know, an Indian burial ground or something inside this building, because $1,450,000 is really cheap. The outside looks really nice, but for it to have been sitting on the market for this long, something's got to be wrong with it. So we'll pin that one for now. Let's pin that one. All right, 1,900,000. 3 acres. Not seeing anything. Okay, transform your business with a large fenced contractor's yard, featuring an office and multiple quality shop or storage buildings available with a 90-day notice. Okay, but we don't know anything about so 2,000 to 130,000 square feet. All right, well, let's look at the photos. I have a feeling that 130,000 square feet is really just a lot and has nothing to do with a building, which means that this price per square foot is really far off. Looks like a nice enough building, though. $1.9 million. All right, let's see here. Oh, or they'll lease it to you for $12,000 a month. So I always think that's funny. It's like, okay, you'll lease it $12,000 a month, triple net, or you'll sell it for $1.9 million. So what they're saying is 12,000 times 12 gives you 144,000 divided by 1.9 million. Is that this property is worth a 7.5% cap rate? Maybe. I find that hard to believe. It looks like, these trees are beautiful. It looks like a very interesting property, but very small buildings, all things considered. Yeah, look at that. Enclosed storage building, 2,000 feet. Shop and office building, 3,100 feet. Open vehicle storage building, 4,500 feet. It's only on 3 acres. This is interesting, but I look at it and I'm like, man, this is really kind of more for an owner-user unless you've got a tenant in hand, right? I just don't know how you're going to make that one work. Dylan is saying, any notes if it's historic, talking about the last building that we were looking at. No, unfortunately, I did not see. I didn't see anything on that. Z is saying, can you do one in Texas? Absolutely, I can. I am doing all of these based off of the chat in the 30 Deals, 30 Days chat room. So if you join the challenge, feel free, which Z, I know you're in, grab something, drop it in the chat, and we'll make it happen. All right. So, yeah, I mean, outside of like an owner user or just having a tenant in hand, like this seems like a very difficult property, I'm going to just go ahead and eliminate that one because I don't know how we're going to do anything there. Alrighty then, this one's 51,000 square feet. Price per square foot is $25. Something must not be right here. Again. 187 days on market. Let's see. Yeah, that 51,000 feet has got to be the land. Yeah, okay. Come on. Man, that's a little embarrassing. You know, nobody markets land based on the square footage. It's just you're trying to be a little, I don't know, catch people's attention by making it seem like it's a 51,000 square foot retail building. Since I don't like the way this is marketed, we're chopping it off the list. All right, here we go. Another building, 17,320 square feet in Tacoma, saying the pro forma cap rate puts it at 10.76. Let's see what the flyer looks like. Historic Horsefall Tacoma building. Cool. In the revitalizing Lincoln District. I like the look of this one. This is really, really cool. Pro forma market cap rate, 6.28%. Well, they must have changed the price or something because they were showing 10% on Crexy. Man, out of the ones that we've seen so far, I probably like this one the most. I don't know what this is about. Second floor renovation plan. I guess they're wanting you to turn the second floor into residential units. Yeah, I mean, that's not the worst thing in the world, but to me, I don't think that that's the way to go. I mean, dealing with so few residential tenants could be a total pain. Let's go back up and look at the plan real quick. Let's see. Black Sheep is saying that spot probably has asbestos and lead and hazardous materials, etc. Yeah, I'm assuming you're talking about the first one. Probably for sure, considering it's there's no pictures of the interior. Sorry to distract. How do I join your club? I have millions of questions and ideas. The mastermind or the 30-day challenge. So Black Sheep, the 30-day challenge, the link is in the description below. That is free to join. The mastermind is the same link as the challenge, just delete the 30 days, 30 deals, 30 days. So the mastermind is at CREcentral.com. And you can book a call with Travis on my team, or maybe me. Just depends. Let's see. Shorish is saying, I want to get a building soon. It used to be a restaurant, but I want to turn it into an office. It's been on the market for a while. The owner said he wants $850,000, 75% up front. That's great. Well, keep us in the loop. I hope you get that one worked out. If the property is on market for a long time, this is from Z, is that a sign that it's not a good deal? Not necessarily. It could just be a sign that they don't know how to price it, but there could be things wrong with it. So, I mean, it's definitely worth looking into. Going back to this floor plan, can you imagine buying this building, building it out, and then dealing with a bunch of tenants that need one bedrooms and rooms with shared bathrooms? No, thank you. Absolutely not. That sounds miserable. I wonder who went through and created this floor. I mean, it looks like a floor plan that was created in Canva. But absolutely not would I do that. I would assume that we would do office on the second floor. Surely the office market is not so dead in the Pacific Northwest that you couldn't do that here. So I don't know. What do we think? Let me know in the chat. Should we do this one, this building or this building? We're going to have to make some assumptions for the rubber stamp building. Drop 1 for the rubber stamp building or 2 for the Horsfall Tacoma retail building. Let me know. I'll let you guys do a little vote in there, and we'll decide from there. Jam is saying, alrighty then, a little Jim Carrey love it. Yeah. Oh, come on. That's actually, yeah, that's probably where that comes from. I haven't thought about it, but I love me some Jim Carrey. Grew up on that stuff. Pyphus is saying, I took a tour of Horsfall. The corner of the building is sinking, and it had a small fire. Yes, there are 5 to 6 small apartments above. I can send videos. Interesting. Yeah. We probably won't have time to dive into the videos today, but that could be really, really interesting. Pyphus is saying, which is why I asked about tuck pointing brick in the chat. Is that too expensive? No, I mean, I haven't found tuck pointing to be too expensive. So for those of you that don't know, brick will basically last forever, but the mortar will not. So you do have to get in there and scrape it out and then basically go and re-mortar it. That's called tuck pointing, all right? No, I mean, I haven't found that to be too bad in my experience. Yeah, I mean, I think it's worth looking into. Because, I mean, think about it. Somebody's got to get up there and hand lay all of that brick, and it's not too expensive either. So with the brick already being there, just going back, I mean, they basically just have a tube that they kind of put it back in their end. So definitely worth it, in my opinion. So that's good. That's good intel, though. We know that the corner is sinking, so we'll have some structural issues to deal with and a small fire if we end up choosing Horsfall. All right, so we've got 1, 2, 1, 1, 1, 1, 1, 2, 1. All right, you guys are overwhelmingly voting for the one that I'm going to have to make some serious assumptions on. Okay, we're doing the Tacoma rubber stamp building. That's the one that we'll dive into today. We'll assume that these guys actually want to sell it, considering it's been on the market for 3 years. I find that hard to believe. But Horsfall, you're a close second. You made it out of the top 4. Number 2 out of 4. All right, let's see what's going on in this area. I like the fact that it's downtown. You know, I mean, I don't know anything about downtown Tacoma, Washington. Could be a terrible place to be. I have no idea. I doubt it. I'm sure it's cool. So we'll try and figure out a little bit about that. I mean, the exterior looks fine. Like, I look at it, and I don't see any, like, cracks or foundation issues or anything that would suggest that there's some sort of structural issue at the building, which is really nice. I mean, it seems to be theoretically okay. I was going to see if I could just drop myself on the other side. Let's go back. All right, let's look at it from the other side. Okay, I am back on the same side. Let's go back. Oops. Oh, man, I absolutely cannot tell which building it is. None of these look bad, I guess is the good thing. All right, let's look that up. Okay, so it's right across the street from 914 Seabury Early Learning. What is this? Okay, so it should be this building right here then. That's what it looks like. I mean, obviously the back of the building is not nearly as pretty as the front, but it doesn't need to be. We're basically in an alley. Looks like there's no busted windows. Again, no major structural issues visible. 24 hours, 7 days a week. Violators will be towed. Well, I hope everybody that's here is part of that group. Okay. I mean, it looks relatively interesting to me. Let's see. Downtown is always a red flag. Crackheads running around. Is that the case for Tacoma? Is Tacoma bad downtown? Pife is saying, would you reach out to get more info, or is that showing your hand too early on rubber stamp? No, that's not showing your hand at all. I would definitely reach out to get more info. So, look, I'm interested in buying this. What's going on with it? I mean, couldn't hurt to ask, right? So, all right, I'm going to assume that we're going to have basically a full gut on the interior, which means that this is going to get very expensive very fast. So they're asking $1,450,000. It's 25,500 feet. So let's say rubber stamp, Tacoma, Washington. Okay, zoom in so you guys can see this. Now, one thing that this is not going to take into account is like construction draws and stuff like that. So it might actually end up being a little more conservative when it comes to debt. Because, when we go and buy the property, we're not going to immediately just draw down 100% of our loan, right? We're going to go through the process of actually paying for the architectural plans as they're finalized, paying to start the demo, paying to start X, right? So you'll actually be drawing down on a construction loan and therefore paying the interest on only what you've drawn down. So this spreadsheet will be more conservative in that sense of like, hey, it's not taking that into account. It's assuming you're using 100% of that debt day one. So just something to keep in mind. Let's see, square footage, 25,500. We're buying it for $1,450,000 because we don't like to negotiate. Capitalized rehab. So if we're going to build it brand new from the ground up, I would bet it's going to cost $150 a foot. So if we have an existing building, an existing lot, I bet you'll be spending, depending on what you decide to build, every bit of $120 a foot on this one, which I think is crazy. But it's okay, $120. 120 times, let me just do the math real quick. 120 times 25,500. That gives us $3,060,000. Closing costs, we're going to need to be closer to 60 grand. Probably more than that. I like to be closer to 2%, but this is a bigger deal, so you probably don't need much more than that. So your total for closing is $1,314,000. So a big deal. It's a big deal, right? Down payment, I think 25% is reasonable. You're basically going to be paying almost cash for the building. 7%, let's say that it's 7.25%, 20-year amortization. Now, I'm going to make an assumption. Well, let's figure out where the rubber's. Yeah, so it's like right downtown. This could be better suited for multifamily. We won't know that, unfortunately. So what I'm going to test real quick is if this would be better for office space. Maybe we could do some ground floor retail. Let's see. Looks like retail, 1, 2, 3. That's not what I meant to click. Ground floor retail and then some office space above. So let's see what office space is leasing for. And I want to look like nice new office. Not medical office, not co-working, not executive office, traditional and creative, because that is the only thing that's actually going to comp what we are delivering. 15 to 20. Okay, here's a comp that's right downtown around the corner. Looks like it's a bit dated. compared to where we are. So we know we should be above 16 to 20 bucks a foot a year. All right, here's another one. They don't have any pictures on that one. It's unfortunate. 12 bucks. No, thank you. Live work. It's kind of cool. I already live at my work. 1150. 18 to 34. So this looks like a nicer, newer building. Asking 18 to 34 bucks a foot. $19. I feel pretty confident that we're in the low 20s, just based off of what I've seen here. Let's look at the insights. Okay, median rate is $24 a square foot a year. 25. I should probably at least be able to get the median. 430 days on market. That's not good. 1,800 square feet on average, give or take. Population's on the incline. Look at that. That's a place to be. I like it. Household income, 76,000. That's very strong. 2028 estimate of 85. I like that. Age demographics, 37. That's a good median age. A fair amount of employees. All right. I mean, I feel pretty confident in being able to get 25 bucks a foot, full service on that. Now let's look at the retail in the area and get an idea of what retail leases for in downtown Tacoma. Ooh, 24 spaces available around us. It's probably not good. Definitely not competing with that. We're going to look a hell of a lot better than this. Let's see, 18 to 30 bucks a foot. Hey, you can't even get high quality pictures for your space. Come on, guys. Like in a world where AI can upsize anything. Oh, man. Suresh is saying, I stayed in Tacoma, Washington about a year ago. The hotel was very nice, but the neighborhood outside was not good. A lot of drug activity. And someone was shot at the gas station near the hotel. While you were there? That sounds not so fun. I would be careful of what you want to purchase it for in the area. Black Sheep is saying the rear parking is value. I completely agree. The rear parking is huge. Let's see. Z was kidding about the crackheads. Houston downtown problem. I mean, I think any downtown's going to have a little bit of issues. Hunter, what's up, dude? Wild pictures. Yeah, clearly they didn't have you working on these listings. That was a big mistake. What the hell? I don't know what they're doing. Like that, that's just, is that from Google Earth? That latest photo? I don't know. Let's see. Lil Burn GA is saying, what's the usual time frame private investors expect to get their money back? Typically 3 to 5 years, maybe upwards of 7. Jam, what do you think about escape rooms? I like escape rooms, but I am not into opening up businesses in any of my real estate. So what I would do is go find an escape room tenant and tell them, have at it, build out whatever you want. Pythus, Tacoma is a great city. I just think it's too close to Seattle's shadow. It's impacted the economics there. Interesting. Okay. So maybe, I mean, obviously you're not going to compete with some of the stuff going on in Seattle, but maybe you can compete with everything else in the city and therefore get some of the existing tenants. 16 to 20 bucks a foot. All this retail is the same as some of the office we were just looking at, which is a little concerning. It seems to me like none of this is actually retail, which could be a good thing. That could just mean like, hey, there's no actual retail available for lease here. Undisclosed rate. Yeah, I would undisclose the rate on that building too. Give it a paint job, geez. 32 bucks a square foot per year for brand new retail. Okay, so we know we're probably close to, I don't know. I mean, it's not brand new and it's not an apartment complex, but maybe 26 to 28. Feel confident with that. So we'll say $25. Full service gross for the office, which is about 75% of the building. And then we've got, and I'm just going to leave it there. We would have a common area factor for the office. So all of the hallways, the elevators, all of that kind of stuff, everybody would be paying their pro rata share of it. So I'm not going to have to delete anything for that. And then we're going to say, let's start off with $26 a foot net on the retail at 25% of the building. And we could go up to 28 before I start feeling uncomfortable with what we could actually achieve. Now, I'm going to look at some investments in the area to see if I can get an idea of what office space is typically, like what their operating expenses are. I'm just going to put a cap rate on it. That way there's hopefully something with an offering memorandum that's going to show me some expenses. All right, let's view the OM. Come on, give me some operating expenses. Oh, the Harvard Apartments? Well, that's not going to give me anything that's remotely close to what I need, but it couldn't hurt to see. All right, so the total expenses here are $110,000. Again, this is multifamily, so this is not going to be apples to apples by any means. I'm just trying to familiarize myself with what expenses are in the area. $110,000, that's actually pretty good. It's around 30% op expense ratio. I would expect for this office to be around 30 to 40% expenses. I don't see how many square feet the building is. I mean, typically they don't share that for multifamily because it doesn't matter as much. But, okay, we know a 30% expense ratio is within the realm. All right, let's go back over here. Let's see what else we have. What in the world is that? That is a very contrasting set of stairs. It's all multifamily. Okay, let's go to office. Apply. If you guys are just joining us for the first time, whenever I do these, you're seeing it live. You are seeing exactly what I would be going through if I was actually looking to invest in this deal. So I know some of this is probably going to get boring because I'm concentrating and trying to figure out what the actual operating expenses might be. Man, there's just like no office investments for sale in this area. Okay, this will be a decent enough, comp. It's not the same style of building. It's a little further away. Probably relatively the same when it comes to property taxes, building insurance, etc. So let's see, 858 days on market, man. Brutal. Man, Kidder Matthews, I'll tell you what, they've got a stranglehold on this market. Looks like just about everything that we've looked at has been listed by them. So kudos to you, Kidder Matthews. All right, where are the expenses? Zero pro forma. Okay, here we go. Current NOI, revenue, stabilized pro forma NOI. I don't really like how they did that because typically when you put something in parentheses, it means it's negative. So like in the financial world, so does that mean negative? You're losing $131,000, and then when you stabilize, you're only losing $800,000. I know that's not what they mean, but this just looks weird. They're saying expenses are $8.24 per square foot, estimated 2023. So let's see if there's one more office building that comes close. Unfortunately, didn't we just look at this one and it was actually multifamily? Nope. Okay, different building. Let's view this OM. Yeah, there's nothing there. Okay. That's fine. Let's just use $8.24 a foot. So what we're going to do is we're actually going to blend this out because we've got $25 a foot on 75% of the property, and that's a full service rate. We have $26 a foot on 25% of the property. So we've got to weight those, basically. So let me run the math on this real quick, and I'll tell you what rate we're going to be going at. $25.25 a foot. The way that I did that, by the way, I just weighted it. So I did $25 a foot for the full service office piece, and I multiplied that by 0.75 since it's 75% of the property. I took the $26 a foot and I multiplied it by 0.25 since it's 25% of the property. I say 75% for the office, 25% for the retail. Added those together, and that gives us $25.25 a foot. So that's our blended rate across the two assets. And then I'll also do something similar. I mean, this is obviously not an ideal spreadsheet for something that's this in-depth. But I'm showing you guys how I actually make that stuff work in this spreadsheet to where I feel good about the underwriting that I'm getting, which is pretty great. So we are going to be 100% vacant for that first year. I have a feeling we're probably going to be at least 50% vacant the second year. Let's say that we stabilize at 7% every year thereafter. I just think that the amount of renovations that we're going to have to do and then the marketing on top of that, like we're just going to be vacant for a while. But we want to get it full as quickly as possible. Okay, so we're paying $8.24 a square foot because a portion, right? The office leases are actually full service. So $8.24 a foot times 0.75, because we're only doing that on 75% of the building. That gives me a blended rate of $6.18 a square foot for what we will actually be paying in our expenses. Does that make sense? So what I would do in this case is I would probably make a note here that just says, hey, this is, a weighted amount for the office space. 6% commissions, we're going to have to pay that. I like 3% annual increases here. I think 3% annual increases there makes sense. A 147 debt service coverage ratio in year 3. It sounds nice, but I might be a little aggressive on my lease up. We might have to go back and adjust that. I am definitely going to raise capital for this because it's just a bigger deal. Let's take 30% for the GP. All right, so we lose 14% year 1. We actually lose some money again in year 2. But then look at that. We start to cash flow in year 3. And we only get our investors a 40% overall return on their capital, which nobody is going to get excited about. See, if we bring this over here, you guys can see our total return. Right, the annualized return is really what we're going for. They're basically making 8% cash on cash every year. Not exciting. And then that IRR gets to 11.54. Nothing great. However, we do have this set to an 8% cap rate. I think that's probably a little too low. Like if we're going to invest this much capital into it and it's going to be that nice of a building with all these brand new leases, I bet we could at least get a 7.5, right? That starts to look a little bit better. Then we'll come back up here and look at, let's look at the rate here. Because remember earlier, we had a comp on the retail side that got up to $32 a foot triple net. Well, I don't think that we're going to get that because they're brand new. What if we got 28 a foot, right? So adding that into our weighted average. That gives us $25.75 a foot on average. So let's see what that does. That ends up bringing up our returns to 60%. All right. So then the other thing that I would start looking at is, okay, well, either we can start to drop our purchase price, which $57 a square foot seems cheap, but I mean, considering the condition of the space, you might have to go even further. Let's say it's $1,350,000. All right. And then I'm going to have to look at my construction budget and go, you know what? We're going to have to make this work at $100 a foot. There's just nothing else that we can do. So architect, contractors, value engineer the hell out of this thing, and you tell me what it's going to take to make it $100 a foot. Let's see what we can do, right? That might, you want to be careful on that because it will start to impact your rent, and it can actually even impact your operating expenses because if you're not using enough material to insulate the building, right, because you're trying to save cost, then, that'll get you in the long run. At that point, look at that. That is a deal that works. Remember, we're always aiming for 100% total return right here on the profit because that means I'm doubling my money. I'm putting in $1, I'm getting back $2, all right? It gives us an annualized total return of 20.16%. I like that. Now, let's look at it from the perspective of, maybe Tyler was a little too rosy on the lease up, and we're actually going to only get to 20% by year 3, and then we stabilize in year 4. Maybe it's just a slower market than we think. Maybe it takes longer on the construction side. At that point, we're still looking at a 96%. So, I mean, that's still a good deal. That is worth doing. Absolutely. Maybe we only get a 7.75 cap rate. All right, still a decent deal. And I mean, a 19% IRR, I don't know anybody that's going to pass on a 19% IRR unless you're just absolutely freaking crushing it. 19% IRRs are good. Let's look at it and say, let's say, you know what, since we decreased our construction budget, I don't actually think that we're going to get that 25.75. We'll get 25.25 on average. And now we're looking at still an 18% IRR. I mean, you start to stress test this deal and it looks decent. Now, the biggest caveat there, we don't know the interior conditions. I made a lot of assumptions, right? I don't know if $100 a foot is going to get it done. So what I would be doing from this step, right? Because remember, I've told you guys multiple times, this is my first blush pass at underwriting a deal. I'll then go and talk to brokers. I'll confirm what the market rate rents are for retail and office space. I'll go talk to contractors and figure out, hey, if we have to do this amount of work inside this space, what does it look like, right? How much should I expect on a price per square foot basis? Then I'll start to make those tweaks from there. Once my architect has actually finalized plans, then I'll go get a true bid from the contractor and I'll be able to dial my underwriting in even more. Then I'll start talking to property managers. Hey, what are the operating expenses for buildings of this type that you're managing? What should I actually be inputting in this deal, right? So that's what I would be doing in terms of next steps from this point. All right, let's get back to y'all's questions. Oh gosh, y'all have dropped in a whole lot while I'm over here. All right, Black Sheep is saying, cool, I'm signed up. Call with Travis. Let's make some shmoney. I needed this, man. Y'all don't know how valuable of information this guy's giving us for free gold. Dude, Black Sheep, I'm happy to do it, man. I'm really glad that you're enjoying it and looking forward to having you in the mastermind. It's a great time, and we'll be able to do a lot of this stuff on your deals specifically. Let's see. Lil Burn GA is saying, appreciate that. Do investors usually get paid out monthly until they've earned back their original investment, or does that depend on the deal structure? Great question. Depends on the deal structure. So the way that I pay my investors out is quarterly. just because it's a lot of accounting. It's a lot of headache to have to send out those checks all the time. I think most investors expect to get paid on a quarterly basis. Black Sheep is saying, get this info now while free and before Tyler blows up and we don't have access to it anymore. It's going to happen soon. I appreciate that. I'm going to make sure it's always free. You guys can always have access to this. Maybe if this 30 days goes well, we can keep the underwriting going, but maybe just not every day. Jam is saying no one likes to show the boring part of the process. This is exactly what is needed. I appreciate that, Jam. Yeah, I agree. That's what I wish I'd had when I was first getting started. It's kind of the boring stuff that nobody wants to show. But you know what? It doesn't do well on YouTube. Like, honestly, YouTube is kind of weird. Like, I've got some videos that I'm like, man, this is probably going to go nowhere. Takes off, gets a ton of views, doesn't actually teach you anything. It just sounds cool. And then all of the stuff where I like really dive in and teach you guys stuff gets like 1,000 views. It's funny. A lot of properties sitting for a long time in that area. What do you think? Not budging on price, or is there a strategy for waiting? Is the town growing? Demographics. So Black Sheep, great question. From what I saw, it looked like Tacoma was growing. You know, the population was growing, the income was growing. Seemed like there were a lot of good demographics for these buildings that we were looking at. So I don't know why there's a lot of properties sitting there. That's something that we would have to figure out just by studying the market a little bit more. It could be that nobody's interested in investing in Tacoma, Washington. I mean, it could be like what Pythas was saying earlier where, hey, everybody's going to Seattle. Nobody's going to Tacoma. It could be maybe people just don't have the vision in this specific area, right? Maybe downtown is not the best spot to be investing in commercial real estate in Tacoma, which doesn't mean it's a bad area for you to invest. I love emerging corridors. I love going where other people don't want to go because you can get really good deals and you can create something, you know? So who knows? Who knows? Pythas is saying a lot of ownership have Seattle and Bellevue area codes. Their expectations aren't met by Tacoma's needs. Yeah, there you go. You've got a lot of out-of-city owners that probably have different expectations of what it should actually be making. C. Perry is saying, are the previous live streams uploaded so that we could go back and review the missed ones? Absolutely they are. In fact, we have everything organized into a playlist already for you guys. So these videos will be continually added to that playlist as well. So if you wanted to go back and watch every single one in order or just watch the ones that you want to, that's totally fine. You can do that. Let me show you how to actually find that real quick. Make this easy. So you'll go to view my channel, and then over here you'll see the live button. So just click live. And you'll see all of them right there. And then we're going to start creating some pretty thumbnails that'll say like what we were actually underwriting that day. So like if you see at the bottom of that thumbnail, day one, it says day one flex space conversion. That way it'll make it very easy for you guys to see what you're looking at. And then of course you can come over here to the playlists as well. And you can click on 30 deals, 30 days. All right. So there you have it. Let's see. Are the previous, oh yeah, sorry, I already shared that. Let's try to find properties in Nashville area since you know all the area and details, just suggesting. Absolutely. I mean, I'm happy to look at some stuff in the Nashville area. Jam is saying, I'd love to hear you on a call with a broker. Depends on the broker. Sometimes they're really good calls. Sometimes they're not so great calls, but maybe we can make that happen one day for sure. Z is saying, let's say if we raise the capital and close the deal and we can't occupy the vacancy to 100% and we fail, how do I back out? Do I give back the funds to the investors and give out a letter? That's a great question, Z. I mean, yeah, if you get to a point where, you get into this deal, I mean, ideally you're figuring that on the front end. And you're doing your due diligence to a point where you feel very confident in being able to hit the occupancy that you need in order to make the investment work. If not, unfortunately, you may just have to lose the money, right? I mean, investors are big boys and girls. They know that they could lose their money doing deals like this. Hopefully you can fix it by finding the right team, bringing in the right consultant to help you turn it around, or getting creative with figuring out the financing. That way you don't have to worry about that. But, sometimes going to your investors and saying, hey, we're in trouble. Do you guys have any ideas? Can actually help make it work. So hopefully that helps. See. Will Byrne is saying, Tyler, these underwriting videos are gold. Thank you for taking the time to do this. Happy to do it, you guys. Hope you've been enjoying it. It's been fun for me. G, what's up, man? He's saying, Tyler, if we are working on a deal in our own business and need some guidance, would you be open for a call? Yeah, absolutely. Shoot it into the 30 deals, 30 days chat, and we will bring it up here, man. Happy to dive into whatever. I mean, all the deals that we're looking at are just deals that people have submitted that have joined the group, so or joined the challenge. So I'll dive into whatever. If you guys want to dive into something in Nashville, drop that in the chat. We'll make it happen. So there you have it for day 6. Join me tomorrow. We're going to be live streaming twice. In the morning, 8:30 a.m. Central Standard Time, we have office hours. I'll just be catching you guys up on what we've been doing for the past week, what I'm working on, and maybe we'll talk about some Reddit threads, something like that. And then tomorrow, I believe the same time. I'm going to have to look. So don't take me up on that. We will be live streaming for day 7 of 30 Deals, 30 Days. Appreciate you guys for joining me, and I'll see y'all tomorrow. This episode of the Commercial Real Estate Investor Podcast is brought to you by my CRE Accelerator Mastermind, where you'll get access to my step-by-step investment blueprint, essentially a library of resources on how to invest in commercial real estate. You'll get connected to a supportive community of other commercial real estate investors that are doing projects just like you. You'll get personalized coaching and feedback from me every step of the way. Go to www.crecentral.com to learn more.